Stocks slid further into the red on Wednesday, extending the sell-off that started on Monday. The S&P 500 is now within a hair's reach of correction territory. It is now down 9.7% from the most recent highs that were realized, and it is very possible that we will realize correction territory during today's trading market. Today, I want to talk to you about why the market is going down and give you two other major stocks that has helped leading the market down the way it is right now. Stay tuned. We're going to talk about all of that coming up next. Hello everyone, my name is Paul Zachary Shelton Jr. and I'm the Chief Investment Officer of Warwick Shore Advisors. We are a wealth and investment management firm located in Orlando, Florida with clients all across the United States. If this is your first time coming to my channel or seeing one of my videos, I ask that you please hit the subscribe button. Please ring the bell so that you can get an update each time I post a new video. And lastly, please like and share this video to help me increase the financial literacy of our globe. So within the technology sector, many of the growth and momentum names that led the market up since the start of the pandemic are starting to retrace now, and we're starting to see a pullback in those names. Additionally, volatility has increased and it's starting to creep back into our market. So where we are right now, we're starting to see value stocks outperform growth stocks. At least over the last week, this has been the case. Over the last 5 days, value stocks are down 4.9% versus 5.3% on growth stocks. And all of the technical indicators show that there is no end in sight as of yet. It is very possible that as we move towards the election and the end of the year, that the volatility that we have right now will remain with us, especially if there is not another round of economic stimulus provided. Much of the volatility on Wednesday came amid the deep divide in Washington over additional pandemic aid and a resurgence of coronavirus cases in Europe and parts of the US, including Texas, Wisconsin, Oklahoma, and Colorado. Today, we're going to take a look at two recent high-flying stocks that are helping lead the charge down. The first stock is Apple. This is a one-year chart of Apple. It currently shows a peak at 137.98 and a retrace down of approximately 22.4%. The stock has reached bear market territory from its most recent peak. The RSI began to show signals of overheating in the stock in early August when the indicator touched 80. There was a large volume of purchases when the company announced its upcoming stock split. This is seen by the big blue volume ticks. Many investors ran into the stock at this time, pushing the price even higher. After the stock split, the stock hit its most recent high and began to trace backwards. Although the stock is on sale with a 22% discount, this still may not be the best time to get in. The technicals show that there is still more froth on top of this coffee. The next stock I want to mention today is Tesla. This chart shows the performance of Tesla over the past year. And similar to the price spike and behavior at Apple, Tesla's stock price was the beneficiary of excitement over the stock split. Now, we all know that the stock split does not generate any new wealth, but it does allow more investors the opportunity to join the ride. Additionally, the possibility of inclusion in the S&P 500 and FOMO increase excitement regarding the stock. Yeah, we all know FOMO is that fear of missing out. So many people were fearing missing out on the ride of Tesla that they jumped in. And unfortunately, it's starting to pull back and retrace a little bit now. But will this be the long-term trend of the stock? So there you have it. Those are two stocks that did extremely well during this pandemic. And one of them, Apple, was able to mitigate a lot of the risk early on in the pandemic in March and April. But they're starting to see a lot more volatility as of right now. Will this trend persist? Will we see more of the transition back to value from growth stocks? And will that momentum continue to wane a little bit in that respect? If you have any of these stocks in your portfolio right now could potentially be a good time to take some profits or at least understand the best way to go around trimming the position are protecting your position from any downside volatility. If you have any questions about any of that, please reach out to me directly. My firm specializes in doing things just of that nature. If this is your first time coming to my channel or seeing one of my videos, I ask that you please hit the subscribe button. Please ring the bell so you can get an update each time I post a new video. And lastly, please like and share this video to help me increase the financial literacy of our globe. Thank you so much and have a great day.